Good morning, everyone. Welcome to the Hurley Investments Trade Findings and Adjustments for the 6th. It's Thursday, the 6th of August. We are just ripping through this year. Kind of a good year to be in. Let's face it. Here we go. Not a bad day today. If you can see, we're really doing pretty good yet again. Always fun to see accounts up almost 10%. Down day today, the S&P is down a negative 2.2, basically flat. When you're flat and you can be up over 50%, you're doing good. There's something that you're doing right. There is something that you should keep doing. I brought up this, I brought up our portfolios here. In fact, let me go ahead and let's move over to, this is a no Parker, that's fine. Let's move down, and I want to talk about Baidu today. Baidu is where I'm looking to work on creating a trade today, and I'm going to give you a bunch of different trades. If we take a look at Baidu, we have some earnings coming up here in the very near future. I would say we'd be looking at earnings on the 13th. So I'm going to have to roll out in some way, shape, or form some protection on Baidu, but it's a technology company that's based in China. Basically, Baidu, for all intents and purposes, come on. Give me a second so I can have the correct everything I want to have. Still working on it. You think I'd have this prepared ahead of time, right? Still not big enough. My eyes got to see it bigger than that. So Baidu is the Chinese Google. My goodness. What a cluster today. Why can't we just have it the way I want it? Okay. Baidu is the Chinese Google. Now, I know someone's already going to tell me, they're going to say, oh my gosh, Kevin, why would you be doing anything Chinese, right? Why would you be doing our competitor, our enemy, someone that's stealing technology? So the first question I always hear people is why? And really it's why China? And it really comes down to, plain and simple, no matter what problems we have with them, because you can make money on Baidu because they are a couple of months, if not quarters, better than the US of A in the COVID pandemic, because they are well diversified, and because it is a diversification strategy or international diversification in your portfolio. Could I go to some ETF in China? I could, but I've had the pleasure of running Baidu from 135 up to 700, a 10-for-1 split on these guys, back up. I know them. I know them. I like them. You can be profitable in just about anything. So you don't have to like the companies that you're investing in. You don't have to like the stocks you're investing in. You just want to be able to make money in them. And really that's my whole point. What can I do to make money consistently in the trades that I'm doing? I want to be profitable in everything. It's who I am. It's my competitiveness. They have earnings coming up in 14 days. So earnings in, come on, Hurley. Earnings in 14 days. And I want to possibly catch a pre-earnings run or run a strategy through earnings. I like them because they've been beat to hell. Let's be honest. I like them because they have been beat to hell. Interesting comment, interesting thought there, David. Occasionally, yes, I like looking at companies that have been oversold. As you know me, I'm not your typical money manager. I'm going to tell you how it is. And my best answer when I look at something like Baidu is yes, they have been beat to hell. If I go out 2 years, you really should be able to see a 288 down to 125. And it's for no reason. There's not a reason that justifies why Baidu is being beaten up so bad. I do like this chart. If you were to look at this chart right here, and I'm going to snap a picture of it, what do you guys see in Baidu's chart right now? Short term. What do you guys see in Baidu's chart? You're going, Kevin, I see a chart. What did you see in that chart, though? There's something particular that I'm looking for. Yes, there you go. Perfect. It's coming to a pennant. Who else just typed something in? Upward trend from Rich Mormon. Mary, it's had a good bounce off of 90. Yes, I agree. But I guess there's no but. In all honesty, I saw it narrowing down, right? Trend lines are narrowing down, that it's coming to a point. Usually it's called a pennant of some kind. But the pennant usually has a flag, you know, it looks like a flag. There's some big drop and it comes up. You could maybe call it right here. But the short answer is it's compressing. We're coming to a point where you're going to see a breakout. A lot of people ask me, well, Kevin, we don't understand Baidu. We just don't get it. And if you take a look, let's do some general understanding. They list them as communication services, internet, and information. Market cap 42 billion, income 335 million. Not bad. I like both of those. Had to get that off my screen. Sales of 15 billion. The book share $67, or cash on hand $61. They're cash rich. I like it. Optionable, shortable. More importantly for me, they have a lot of debt. Not that it worries me right now. A reasonable PE for a technology company. This year's earnings is worrisome. Next year's looks okay. Wow, pretty good earnings per share. Looks like Apple, in all honesty. Insider owned, they believe in their own. It's nice institutionally owned, over 50%. Gross margin is huge. Operating and profit margin on the lower end. They've got a huge short float. These guys are spring loaded for a short covering rally. I wonder if this will be the year that they do it. I wonder if this is the year that they take off and really pop, because they are ridiculously ready for a move. I mean, they're just over short. So here's their website. Somewhere in here, it allows you to go to English. About Baidu. Here is their English part of it. But their investor relations, it's kind of neat to go through it. You should look at it. When you go through About Baidu, find out who they are. Come on. Well, I guess it doesn't go through it all. That's not helpful. Here, I really wanted to go through with you on the fact that they own like 33% of Alibaba. I wanted to go through with you some of the things that they are in. So let's see if we can't. How do I want to do this? Let me ask you guys, where do you go to find information out on companies? Where do you guys go to find information about companies? I usually have gone to Yahoo. It's been a while. It's been since, in all honesty, it's been since December when I do all my research. I like how they have the information in here. It's easy to see. Company Outlook is locked. Let's go to the profile. The description. Enterprise Internet Search Services, because they're Google. They're part of IQ. I forgot about that. They also do apps for short videos, encyclopedia, maps. I mean, they're very well diversified. A Chinese language mobile keyboard. They still own, again, either 20 or 33% of Alibaba. IQ as in regards to the movies. They also do and work with IA any artificial intelligence. I guess that's AI. So I like where they're spread out and what they're doing. I mean, it looks interesting to me. 18 analysts. They're well covered. Overweight. 9 are strong buys. 16 are buys, a couple holds. There's no sells on them right now for trend recommendations. Go to holders, institutionally owned institutions. I like it. I like seeing a lot of our big companies. BlackRock, Vanguard have shares of them. Sustainability. I haven't seen that one for a while. Conversations aren't there. Financials. I like them. There's a lot of information to be had here. So a question to you guys. Is there anyone here that does not like them? Is there anyone here that says, Kevin, you're off your rocker to be in here? Maybe. maybe. There we go. Yeah, and I agree with you. In fact, David, that's a great way to say it. You can make money on anything, and you can. And you can lose money. You've got to look at both sides of the fence. But you can make money or lose money on anything. I get it. So, question is, what would I do? If I was placing a new trade today, what would I do? I'm going to go to our positions page because I really like some of our current positions and where we can do better on them. If I was looking at a new position on Baidu, well, as I'm looking through some of these, the January 121, 120 calls, too close to being in the money. They're already profitable. I wouldn't put new ones on at this strike price. I wouldn't pay $16 for them. I like the January 135s, but $9 is also a little steep. I'm looking for something cheaper. I wanted to do maybe the 150s, but 1442 is a little steep for me. I do like the January 21s, 150s or 155s. They're cheap. They're relatively cheap. It's a good position that I could be in. And I also like it because I would need to be, for all intents and purposes, I would need to find something that I could afford. If you don't have a restriction on what you can afford, go Go big. Go get some shares of the protective put. That would be an awesome position to be in. Go shares, protective put. You're out of here. So I'm the one that has some January 21 155s. So if I was looking to do a trade, I would literally be looking at something along the lines of buying, you know, making it cheap, something like 4 155. I'm just playing this earnings or next. It's relatively cheap. It's 422. Maybe you only do 2. I could do 3. Do 3. It's a $1,200 investment. It's something that that you're playing an earnings run on. And you're still giving yourself some time to be okay. Snapshot analysis, also pretty interesting. Most people think they're going to do very well. In fact, it's kind of neat. Baidu usually does extremely well during our doldrums of summer. Our doldrums of summer, Baidu usually knocks it out of the park. So, neat opportunity right here. I would be totally okay, and I think it's a good spread trading opportunity. You could take a look at this one and go, Kevin, I want to do your 3, but in all honesty, an even better trade than just going long is spread trading it. Spread trading it and adding a $1.33 cost base, $1.36 cost base, maybe even $1.50. $1.50 cost basis to make $10. No brainer. As I was working the numbers, a spread trade, $1.50 to make $10, you can't find a better risk to reward. What an amazing risk to reward. I really like a spread trade on it. That would be the ideal position to be in. So if you're looking for a trade to put on today, $1.50 for a possible $10 movement, where you have this earnings and next, where if we're wrong, we can roll the short call down and create a bear call position to completely pay off that last $1.50. Amazing opportunity. Earnings coming up on the 14th. This would be the trade that I'd be looking for. This is the trade that I'd take a peek at, and that is an amazing opportunity in a diversified or in a market that maybe we normally wouldn't be in. I like it. I like it. I like it. I think you can't find a better opportunity than what we have right here. Any questions about this particular trade as I'm messing things up all over? 2 questions came in. Would you go 3 contracts? So, good comment. Rich actually makes a great comment. Kevin, Would you go 3 contracts to 10? So no, again, something I always want to try to do is I want to play for the worst scenario. So if you can afford 10 contracts, my suggestion is start off with 4. Start off with 4. That way, if you're wrong, you have the opportunity to dollar cost average, and you still have cash sitting on the side to adjust a position, to buy puts. There's a lot of things you can do, but it's all a matter of how you look at your trades. Well, Kevin, I can afford 10. Can you afford to adjust them? Can you dollar cost average twice? Do you have the money set aside to buy long puts? Just because you might be able to afford 10, don't think of it as your best case scenario. Look at it and think of it in your worst case scenario. So plain and simple, the correct answer, Rich, to your question is if you can afford 10 and can afford a dollar cost average 2 more times and or have enough capital to also do puts on it if you need to, by all means do 10. If you're a little sketchy, if this is your first trade into Baidu, if you're new to the company, I might suggest you do not do 10 and you start with 4. So you can dollar cost average 4 more contracts 1 or 2 more times into the future. And I think you'll find it a unique way to look at how you're trading and to be protective of your money. So I don't know if that's answering your questions or not, but definitely if you can go with 10, it takes full advantage of commissions and you're in great shape if you need to. But do think of it in terms of your worst case scenario. What do you do if it doesn't go the way you have planned? And pretty interesting, Brad makes a similar comment. Steps for adjusting. So if you're going to do a leap, you're going to dollar cost average. You're going to dollar cost average, and you're looking at again needing extra capital to lower your cost basis between now and January 2021. It does not have to get up to 155. That is your guaranteed break even, plus the cost of your leap long call. We're kind of just playing this for the earnings, for an earnings season that typically does very well through our summers. For whatever reason, China does not have summer doldrums. At least Baidu has not. So plain and simple, you're going to dollar cost average your leaps. As I mentioned, if we get a horrific earnings and it falls, you can take off your short calls for a profit, and you can roll the 165s maybe down to a 150 and bleed some time off of those to possibly break even, which means the next earnings you're going to take off those shorts altogether, and you're just going to have some 155 long calls in place that plain and simply have a much lower cost basis than the 425-ish midpoint that's associated with the 155s right now. Did Finviz change their charting? Not that I recognized. They've always had, they draw some trend lines. So in all honesty, I don't believe they've changed their charting. They don't always draw trend lines, but most of the time they do. There's Apple, there's Disney. Wow, Disney's, there it is. Here's what I'm looking for with Baidu. See how it came down to a pennant, a flag or a point, and then Disney broke out above. That is exactly what I'm looking for in Baidu. But I'm looking for it because historically they do really good during summer. It's my summer doldrum stock. I don't see a difference, Rich, in charting for FinViz, but I usually do my charting through stock charts. I just go to FinViz when I'm looking for a quick snapshot of the overall fundamentals, and I know that they do have a charting there, and they do draw trend lines for you. All right, any other questions? Guys, have a wonderful day. I appreciate the 20 of you or so being here today. Hopefully I did my questions out there. Have a wonderful weekend. I'll look forward to seeing you on Monday evening. And go Arsenal. I've got a boy that's in a, boy, he could play, I think it's 8 soccer games, hour and a half over this coming weekend, in nice 90, 95, 100 degree weather. But go Arsenal, go Taylor. Guys, have a good good weekend. I'll see you next Monday night. Bye-bye.